Welcome to the second segment of today's video, where we'll now discuss a little bit more about financial modeling and financial statement analysis. We begin with, what is financial modeling? It is a process used to help in making investment decisions. Now, to understand what kind of investment decisions, you can read the uses below, but let me give you a few examples. In the first example, your friend comes to you. She has a dessert shop. She bakes and sells desserts. She has been approached by her sister's friend who would like to enter into a partnership, who would like to join her dessert shop. So how does she go about? You can create a financial model for her by asking her to tell you about the revenues, expenses, profit, cash, assets, liabilities. And then using this information, you can value her business and then allow her that for this is the value of the business. If you're offering such a percentage of stake, this is the amount of money that she should pay you. In the second case, let's consider the job of a financial analyst who has been approached by the CFO. The CFO says that we have received a proposal from an investment bank to invest in a block of flats, block of residential flats in London. Number one, should we consider this proposal? Number two, if yes, then what should be the best price? Now, it would be important to do a lot of primary and secondary research about the macro and micro factors, but the working out of numbers can only be presented brilliantly in a financial model. So you can make a recommendation to the board whether yes or not and show them the working in a financial model. Also, if the board comes and tells you that we are contemplating opening the primary school, can you prepare a feasibility study? You can do that in a financial model. Even for personal decisions, suppose you have a petrol car and you are contemplating buying a diesel to save on fuel efficiency, to improve the fuel efficiency, because diesel engines have higher fuel efficiency compared to petrol cars. But diesel engines also have higher prices and higher maintenance costs compared to petrol cars. So you can create a financial model and see whether for the time frame that you want to hold the car, 5 years, 8 years, 10 years, would you end up benefiting by making this decision, or is it advisable to stick to your petrol car? So now we look upon what is financial statement analysis. Financial statement analysis is a core aspect of financial modeling. You should be able to analyze and study financial statements. By looking at those numbers, you should be able to understand what is the financial performance, what is the financial standing, is the company financially sound. You can look at how well the company has been generating profits, how well the company's revenue and profit have been growing, how much the company has been borrowing, and how much cash it has been generating, and all of these questions that fall under financial statement analysis. The users obviously of financial statement, number one obviously will be the management of that company. You would have investors who would invest in that company, you would have creditors who would lend to that company, and obviously the regulatory authorities who would have more than one use of creating financial, and obviously the regulatory authorities who would have more than one use of financial statement analysis. And that's a wrap of our second segment. In the next segment, we will take on financial statements, particularly the income statement and the balance sheet.